with us, founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here. Thank you very much for your time. How are things looking to you, Gautam, with the rally? I mean, I think, if we were talking yesterday morning, it would have been so different, right? It's just that yesterday, post 1 o'clock, we had that sharp slide, and the pictures changed maybe a little bit. But your thoughts near term?
Good morning, Prashant. I'm actually quite surprised that the market chose the last 10 days of December to do what it did yesterday, because typically this does not happen. It's a seasonally positive period, and clearly India's outperformance continues. But I think this is a much needed reality check. I think we've had a parabolic move, not just for the mid caps and the small caps, but for the Nifty itself, something that we've not seen in a very, very long time. So I think the quality of stocks that were rallying, I think, was questionable. And when you reach a point where price action dictates fundamentals and trends, is when you start getting a little concerned about the trend. And that seems to have got corrected yesterday. I see it as a very normal shakeout. I think India's outperformance in the world will continue. Global equity markets continue to be rock solid. But in terms of levels, I think this area of 21,500 was a technical resistance. We've corrected from there. And I think we'll find support quickly. So this looks like a knee-jerk passing shakeout. Unlikely that this will convert into a trend on the downside. And there is very good support coming in at 20,900, and possibly with 20,500 being a base. I do see the market stabilizing soon and starting to do well again. But I think now going forward, what's going to happen is that it's going to be a more balanced market, a more realistic market, where I think quality will be rewarded. And I think all those grade C, D stocks, which were doing well, that will now lose the momentum after yesterday's fall.
It's interesting you say that, Gautam. Hi, good morning. I was chatting with a wealth manager the other day on one of my shows, and he said when we onboard clients, the first thing we tell them is that every year this market will see a minimum 10% fall. So if you're ready for that, then come in and invest into the market, every year or a couple of years. So I guess it's just par for the course, the kind of shakeout or the pullback that we're seeing, right, the give back. But how does one approach it? Do you wait a bit before you buy into the stocks that you like or buy into the stocks that are looking attractive? Or do you start now itself? What's your expectation from here on?
Well, Sonia, the 10% point that you made, I think, is easier said than done, because yesterday was a 1.5% fall and people couldn't take it. So imagine if you were to see a 5 to 10% dip, what kind of an impact it would have on markets, and it would have on emotions of people, because we are so used to seeing this market go up on a daily basis. I do believe that, India is in a sweet spot. There is no doubt about it. All the headwinds that we had a couple of months back in terms of inflation, interest rates, geopolitical risk, the assembly election results are out of the way. And therefore, I think a shakeout was needed. And this will just make the market a lot more lighter, a lot more healthier. And as we approach support levels, I think quality stocks will see a quick turnaround. So as I said, 2,900 and 2,500 are my important supports. And I do see a lot of opportunities in sectors like IT, pharma, banks, metals, power, fertilizer, infrastructure. So I think one should just be stock specific. Don't bother too much about the index. And let's not forget global equity markets in general. Look at Europe, look at US. I think they are also very, very strong. So unless they derail, it's impossible that India will derail on a standalone basis.
All right. Hi, Gautam. Good morning. Just hold on for a minute. I just want to ask my director to pull up the advanced decline ratio, and both those two lines should come up for our viewers. When we started off in the first few minutes itself, you had only one stock that was advancing and 5 stocks that were declining. That's quickly turned around. We're just a few minutes into trade, but now you have few more advancing stocks in comparison to the declining stocks. And when in the first few minutes we were down 170 points, well, if you were able to keep a stop loss of 30, 40 points approximately, then risk reward could have favored you. For the time being, that's worked out. But let's see whether or not we can hold on to that 20,900 or 20,950 level that Gautam as well was just mentioning. Gautam, for 2024, one wonders whether it's going to be the year of the large caps that will return. So any couple of names you could give us, in terms of which could be those stocks. HDFC Bank is one stock that's been a relative underperformer. Reliance Industries has gone through a bit of consolidation. Do you think one of these could do really well from here?
Well, I'm not very sure whether 2024 can be the year of large caps, because to be honest, the kind of domestic liquidity that's coming into the mid caps and small caps, I think it's roughly 8,000 crores on a monthly basis. I think that's been a game changer. A lot of people are comparing today's market with what happened 10 years back or in the 2003, 2007 bull run, which is not a fair comparison because that entire rally was led by foreign liquidity. And this market, 16,000 crores with 8,000 crores coming into the mid caps and small caps, has just changed the game for the broader markets. So I think the broader market strength will continue. Quality will be rewarded. I think if you stay with the industry leader and challenger in all the top stocks in the mid caps and small caps, you will do well. In the large caps, I think you have to be very careful with your pickings. I think in the banks and ITR spaces that we like. So in the banks, we like SBI. I think SBI is a stock that can surprise and could be one of the star performers of 2024. So that's a stock that we continue to recommend our clients. And followed by the IT space, I think where stocks like TCS, Tech Mahindra, HCL could actually deliver better than index returns going forward. So just choose your stocks carefully. I think over-researched, over-owned stocks might not do as well as the names that I just put out.
So, Gautam, while you're speaking, we have Rajat Rajgarhia, who's joined into our discussion. He's here with us in the studio. And he